Hello, and welcome to this video on variances. Now, in this video, we're going to be looking at materials variances. So just a little reminder first of all, variances. What are they? Two things. You compare the standard cost with the actual cost, or you compare the standard revenue with the actual revenue. As we did in standard cost before, the word standard means the expected cost there, and here the expected revenue. Right, we've got three material variances we're going to be looking at. The overall materials variance is equal to the following. It's the standard cost of the materials for the expected output, subtract the actual cost of the materials. The material price variance, so compare the price then, is the standard cost of the actual quantity of material used, take away the actual cost of the actual quantity of material used. And finally, material usage, so the amount of material used, got a standard quantity of material for the actual production at standard price, subtract the actual quantity of material used at the standard price. Now they become a lot more meaningful when we look at some questions. I'm going to have an example here. So I've got product A, and here we've got the cost for a batch of 1,000 units. So the batch means a group of units. So in this case, we've got a group of 1,000 units. So we're told that for the standard price of concrete is 25p per kilogram. The standard usage is 1,200 kilograms. The results for the latest batch are as follows. So this is what actually happened. The actual price of concrete was 30p per kilo. So that's more than the standard cost. The actual usage was 900 kilos, and that's less than the standard cost, the standard usage. Now what we'll do, what are the variances for the material costs? So then bit by bit, the overall materials variance is the standard cost of materials for the expected output. So the expected output here, so standard usage is 1,200 kilograms. So it's going to be 1,200. And the standard cost was 25p. Now the actual cost, let me just put that in pounds, so it's 25 pence, 0.25 pounds. Now the actual cost then was, we had usage of 900 kilograms, so it's 900 times, and the actual price of concrete was 30p per kilogram. So it's be 0.30, so 0.30. Now we do the calculations. 1,200 or 1,200 times the 0.25 gives us £300. And for the actual cost, we've got 900 times 0.3 pounds, and it's £270. So the difference here is 300 to take away 270, and that's going to give us £30. Now, I've got down here favourable. Now the variance is going to be either favourable or adverse. So let's see why it's favourable. Right, the standard cost for the expected output was going to be £300, but the actual cost of the materials was only £270. So it's cost us less than expected. So if it's less than expected, it's favourable. So the overall material variance is £30 favourable. Now your material variance is going to be split into two subcategories. We've got the material price variance and also the material usage variance. So let's do one at a time. The material price variance then. So it's the standard cost of the actual quantity of material used. So again, the standard cost, if I go up to the top now, was 25p. Let's put that in the second bit then, so that's 0.25 again. And the actual quantity, this time going to the actual one, was 900 kilograms. Going to have 900. Take away the actual cost of the actual quantity used. So again, the actual quantity was 900. And the actual cost was 30p per kilogram. So it's going to be 0.30. So 0.30. Do the calculations now. So we have 900 times 0.25. We get £225. And 900 times 0.30, we get £270. So the difference there is going to be 225, take away our 270. So the difference of £45. So that's a negative £45. Now, we must now get favourable or adverse. So we expected the cost of the material to be £225. The actual cost was 270. So again, the actual cost was more. So it's cost us more than expected, and it's £45 more. So we've got £45 more. So if it cost us more, then that's going to be adverse. So it's £45 adverse. Right, material usage now. So it's the material actually used. So it's a standard quantity of material for the actual production at standard price. So standard quantity material, we had to go back. So standard quantity of material. We have is, here we go, 1,200 kilograms. So 1,200 at a standard price, and the standard price was 25p, so 0.25. The actual quantity of material was 900 kilograms. And at the standard price was our 0.25p, so 25 pence. So do the calculation now. You've got 1,200 times 25p gives us £300. Take away the 900 times 25p, and that is £225. So the difference then between the standard quantity of material and the actual quantity of material at the standard prices is going to be the £300, take away the £225, and that is going to be £75. So the standard amount was 300 and the actual amount was 225. So again, the actual amount is less than the standard, so it's in our favour. So it's going to be £75 favourable. Now we can check if we've done it correctly, because the materials variance is a combination of the two, the material price variance and the material usage variance. So material price variance, I've got down here is £45. That's our £45 there, that's adverse. So it's £45 adverse. And materials usage variance just worked out was £75 favourable. When we combine them together, we've got a £45 adverse, then add on a £75 favourable, going to end up with a net amount of £30 favourable. So now we go back to our original calculator at the beginning. We're looking for a £30 favourable, and that is what we actually have, £30 favourable. So that's how to do your materials variance, material price variance, and material usage variance.